acquired in 2021 as two parties are close to finalizing on a deal after months of dispute, money control reports. Chaudhary is going to take over from Abhishek Maheshwari, who quit as CEO of Akash last month. The government is in the final stages of fixing eligibility norms for direct listing of Indian companies on foreign exchanges. Sources say companies could need a minimum period of operations in India. The government is considering 8 or 9 specified jurisdictions for overseas listing. Big breakthrough for blood cancer treatment in India. The drug regulator approves India's first CAR T-cell therapy, which is expected to be 90% cheaper at 30 to 40 lakh rupees. It has been developed by ImmunoAct, an IIT Bombay incubated company in which Laurus Labs holds 34% stake. Freya Energy, a tech-enabled rooftop solar company, has backed an equity investment of 58 crore rupees from FI Electrify. The funds will be used for building team, product development and marketing. Netflix's crackdown on password sharing likely boosted subscribers by about 6 million in the third quarter, and the streaming pioneer is expected to set the stage for price increases when it reports earnings on Wednesday, says a Reuters report. Hello and welcome to Startup Street. Our top story this evening, a big breakthrough for cancer treatment in India. The country's first CAR T-cell therapy for blood cancer treatment has received the go-ahead from the drug regulator. NextCar19 is intended to treat lymphomas and leukemia and is expected to be up to 90% cheaper than the current alternatives. Now, it has been developed by ImmunoAct, which is an IIT Bombay incubated startup in which Laurus Labs holds 34% stake. Currently, Indians import the treatment at around 3 to 4 crores per person. ImmunoAct therapy, on the other hand, may cost around 30 to 40 lakh rupees per patient. The startup is aiming to scale up and bring down costs even further.
Approval just came a few days ago, and we are very excited about it. And the cost, as you rightly said, is at the fraction of the cost. Cost would be hardly like 30 to 40 lakhs compared to what is available in Western countries, which is around $500,000, 3 to 4 crore rupees there. Right now, we can treat up to 500 patients a year of leukemia and lymphoma because of personalized therapy. But we are hoping that within a year, we scale up to around 3,000 to 5,000 patients every year of the blood cancers. As a R&D company, we want to focus on innovation, and we completely understand that in India, even 30 to 40 lakhs would be very, very high cost. And our aim is around getting somewhere around 20 lakhs rupees range.
On What's Brewing today, Bengaluru and San Francisco-based cross-border neo-banking startup Zolve has secured a warehouse debt facility of up to $100 million from Community Investment Mgmt, which is a US-based institutional impact investor. Founded in 2021, Zolve offers a full-fledged financial services app, an FIDC-insured US checking account, and a high-limit credit card to new immigrants moving to the United States. The startup says it's going to use these funds to offer credit products to immigrants in the US and look at geographical expansion. Joining me now to talk about this is Raghunandan Ji, the founder of Zolve. Raghunandan, welcome to Startup Street. Thank you very much for your time here. If you could start by telling us about the venture briefly. You're only 2 years old now. What is the gap that you're solving for and what the response has been like so far?
Yeah, thanks a lot, Ritu, for having me. So the problem that we're trying to solve for is whenever people migrate to a new country, because they don't have any local credit history in the new country, they end up being treated as high credit risk individuals, because of which access to credit is limited, and whatever limited access to credit that they have, those are super expensive. But majority of these folks have a great credit history in their home country. And we as a company believe that credit worthiness of an individual is a reflection of their behavior, and the location has nothing to do with it. The problem exists because financial institutions in one country doesn't talk to the financial institutions in another country, because of which a low-risk individual gets treated as high-risk individual. And that's the problem that we set up to solve for.
Raghunandan, this $100 million of warehousing debt that you've raised, this is going to be a revolving line of credit, and you'll be using this to offer more credit to immigrants in partnership with community federal banks, or how are you going to exactly use these funds?
So the $100 million debt is used to scale the business aggressively. The thing about the migrants is majority of the migrants hang out with migrants from the same country in the new country. And because of which we get a whole lot of referrals. Without doing much marketing, we are able to get access to a whole lot of customers. And this debt facility will help us in solving the access to credit problem for majority of the migrants as we do. And currently we are only operational in the US markets, but there's the same problem that migrants from India face in Canada, UK, Australia, New Zealand, Europe, in all those countries as well. So our limitation to get access to capital is the only thing where we migrants to other countries are also continue to suffer from the same problem.
So besides the US, these countries that you named, including Canada, Australia, others, are you going to expand operations there? And if yes, how soon? And what is the market size for these credit products that you're offering to immigrants, in terms of what the growth potential for Zolve could be?
Also, this is interesting. So when all the neobanks across the world are built to target probably subprime customers, majority of the Indian migrants to these countries are completely in the super prime category. An average Indian household income in the US is around $135,000. An average US household income in the US is $65,000. So these are the super prime customers having this challenge. So we're building a neobank to cater to these super prime customers. And because they are super prime, they are ready to avail these services. So people come to us for the credit, but there are more products on the platform: the bank account, remittances between India and the US, insurances for these folks within the US, providing access to loans also in these countries for these folks, and also help them in opening up an NRE and NRO account back in India, and manage their investments back in India, and taxation between the two countries. There's a whole suite of services that we intend to build for these folks, right? And the market size is significantly higher. More number of migrants are continuing to migrate to other countries, and the number of migrants are only increasing year after year. And most of these markets have also relaxed their migration laws to facilitate more number of migrants coming to the country. So overall, this is a growing market. The pain point is real, and these people can pay for services also.
Well, Raghunandan, if you could briefly tell us, you're a new bank, not really a bank. How does the business model work, and what is the kind of revenue and profits that you've been able to generate in the last couple of years you've been operational in?
So interesting. So what we do is we are a neobank. So we work with a couple of sponsor banks in the US, right, through whom we provide our customers access to bank accounts, credit card, and other financial services. Our business model is fairly simple. So we acquire customers while they're still in India. All right. So because of which our cost of acquiring customers is in Indian rupees, and all our revenues are in US dollars. All right. So whenever a customer uses a credit card, we make interchange, and whenever the customers revolve on the credit line, we make an APR on top of that. And for the deposit the customers keep, we get a share of the interest that they earn. So all our revenues are in US dollars, but all the costs are in Indian rupees. So the model is unit level profitable from day one itself. And so these are the two products that we're currently live with, but adding more products: remittances, insurance, loans, getting to the same customer base as well. Right. In the last 2 years of our operations, we are currently at $10 million of ARR.
Raghunandan, you've facilitated around $600 million of transactions so far on the platform. Could you give us a sense of what the target is for the next year, and to what extent are you hoping to grow this figure, say, in the coming year or so?
Also, currently, so we have close to 5 lakh customers on the platform, but we have not been able to provide access to credit card for all these folks, right? Because of the access to capital, right? So as the credit card portfolio starts maturing, we should be able to raise debt at a much cheaper cost than what we are able to raise it at, and we should be able to cater to a whole lot of customers. So currently, our TPV is close to $600 million plus now. All right, by December 2024, I think we should be at close to around $3 billion of TPV.
Welcome back. You're watching Startup Street. Now, Urban Company, which is a player in the home services category, has tapped into the home solutions business with the launch of smart RO water purifiers under its sub-brand Native. What does this foray into consumer product segment mean for the company? My colleague Aishwarya Anand finds out in this report.
Home service provider Urban Company is now foraying into selling products onto its platform. The homegrown startup has launched 2 water purifiers, Native M1 and M2, that boast of a remarkable 2-year filter life, a feat that the company claims even the largest OEMs have not been able to achieve. The move is aimed at expanding Urban Company's revenue streams and reducing reliance on a single service sector. Urban Company's new Native water purifiers come with rapid reverse rinse technology and multi-micron filter surfaces that it says will help filters last for 2 years. This in turn would mean an average saving of Rs 18,000 on total ownership and service cost over the years. The company says it will also offer a zero-cost warranty for 2 years, which includes all filters, membranes and spare parts, helping consumers save more than Rs 3,000 on annual service costs.
We've serviced and repaired over 1 million water purifiers. And one of the constant pain points we heard from our consumers was that why is it that water purifiers need servicing and filter change every 6 to 9 months? Eventually, we could not ignore this consumer pain point, and about 2.5 to 3 years back, we decided to get deeper into it and try and see if we can build our own water purifier that needs no servicing for at least 2 years. Today, that's the product that we have unveiled, the Native Smart Water Purifier. It's a state-of-the-art water purifier.
While Native's basic M1 water purifier will be available at an introductory price of Rs 13,499 and the IoT-enabled M2 model is priced to be at Rs 17,499. The IoT feature available in the higher-end version can help users track real-time TDS levels, water consumption and filter life status on their Urban Company app.
It's also smart, so it's fully integrated into the UC app. So you see the quality of water, the water consumption, the life of your filters, it's all there. If anything goes wrong, it triggers a service request to Urban Company and we come and correct it, and it also notifies you.
Urban Company has tied up with a third-party manufacturer to make the product. It is currently available on the company's app and website as well as on Amazon and will be eventually expanded to cover modern trade channels. In the next phase, the firm plans to launch smart door locks.
We are toying with smart door locks right now, and at the right time, in a couple of geographies, it's already live on our app. At the right time, we will launch that as well. For now, it's just these two. We want to do a good job, first of the Native water purifiers, and take one step at a time.
You know, your core revenue stream is through services, right? Now, with selling of products coming into the picture now, how do you expect it to, will it be boosting the business, or do you think your revenues will take a hit? How do you see it going forward?
We're still scratching the surface of the opportunity in India. We would not have more than single-digit market share. We have 50,000 service professionals on our platform, but there are millions, who work in the unorganized and fragmented industry. So there's a lot of work to be done in core services. We think we have several years of growth, high quality growth in the tank, and if you see the last few years, you will see that that's growing very, very steadily. So we're very bullish about our core service business. We think this foray into Native water purifiers will only augment that growth further.
The hyperlocal services platform's India business is expected to be profitable in the near future after breaking even in Q1 FY24 at an adjusted EBITDA level with negative working capital. The firm had narrowed its losses to over 40% at Rs 308 crore in FY23 from Rs 514 crore in the previous fiscal year, while its revenue from operations jumped 45% to Rs 637 crore in FY23 from Rs 438 crore in FY22. This is Aishwarya Anand for CNBC-TV18.
Okay, from a D2C home services company to a D2C jewellery brand, that's Bluestone, which has closed a 550 crore rupees funding round from existing and new investors, which include Zerodha's Nikhil Kamath, Ranjan Pai, Amit Jain, Deepinder Goyal, 361 and Info Edge Ventures, among others. The startup is month-on-month EBITDA positive. Its founder and CEO Gaurav Singh Kushwaha told my colleague Aishwarya Anand on the sidelines of TIE Delhi's NCR Sustainability Summit. Take a look at that.
We have closed the round. Mr. Ranjan Pai, Nikhil Kamath, Info Edge Ventures, Sanjeev Bikhchandani, Amit Jain, Deepinder Goyal. These are some of the known, very prominent names who have actually joined the round. The overall round size is 550 crore as it was reported in the media a while back. So that round is closed. There's a secondary transaction that is still ongoing, but the primary component was 550 crore, which is already closed.
Where do you plan on deploying this capital?
So at a unit level, in fact, operationally we are profitable. So August was a bit profitable, so is September and so on. But what we need to do, and as omnichannel is working out very well for us, we need to expand our presence in many cities. And there are so many cities where we are still not present. We are only present in 70 cities right now, with around 180 stores. Cities like Surat, Udaipur, we are not even there, and these are very big pure cities for us. So the idea is to expand our store presence in all these cities, and a lot of capital would actually be deployed towards that. So it will go towards working capital. The P&L is strong and the P&L is already profitable. So that essentially is the plan for deployment.
Okay, and you were close to valued at 578 million last year, somewhere around that, with the last $30 million fundraise. Post this fundraise, where does Bluestone's valuation stand currently?
So last round happened at around 360 million or so. Currently we are valued at around 3,600 crores.
So what is the offline-online revenue mix that Bluestone is clocking currently?
So when I look at the origination of sales, almost 80 to 90% of sales are originating online. When we are looking at where the sales are converting, almost 80% are converting in stores. The strength of omnichannel in the overall purchase life cycle is only going to increase, and hence a very strong tailwind for our business model.
So how many stores can we expect you to open by the end of this year?
By the end of this fiscal, we will be at a count of around between 200 to 220.
Okay, and the target for next year is?
Around 300.
300. Okay, all right. Also, now the festive season is here. Tell me, how is Bluestone gearing up to cater to the customers? What are your expectations from this festive season? How much business did you clock last year during the Dussehra, the Diwali season? And, from that, how much do you expect it to grow this year?
Right. So on the numbers front, last full year we closed at around 760 crores or so, approximately that number. This year, on a like-to-like basis, we are so far year to date we are growing at 100%, and we expect Q3, which is the festive season, to also be almost 100% above last year.
Okay. Now, in terms of geography, help us understand where do you get most of your customers from? What's your penetration in the Bharat market? And if you could just give us a sense of that.
Right. So what we always knew was that we were very strong in metros, and I thought that the stores in metros would actually do significantly better, and that tier 2, tier 3 would take time to kind of come up. When we started opening stores there, I was in for a surprise because those stores started performing phenomenally well. The availability of newer products, good designs, etc. is even more scarce in tier 2, tier 3 cities, and hence the demand for our stores, demand for our designs was much stronger there than what we anticipated. So some of our best performing stores are not in metros.
Okay, all right. Take us through how has FY23 been for you in terms of revenues. Take us through your profitability, and what are the plans for FY24?
So last year we grew at around 80%, and this year also we plan to grow by around 80-90% or so. So almost doubling the business over FY23. FY23, as I said, was around 760 crores. So we should deliver a growth of around 80-90%. For full year, we will be significantly better profitable, and next financial year we should be PAT profitable also.
Okay. And take me through what is the secret sauce of you being profitable, because usually consumer brands, they're burning a lot of cash. It's tough to be there. That's the trend that we've seen in the market. What has been Bluestone's secret sauce there?
So I think fundamentally a lot of it also boils down to the DNA, the kind of organization you have built. So we never lost a lot of capital. So for example, last 2-3 years losses also, if you see, those are in the range of 30 crore, 40 crore, 50 crores. Those numbers which are kind of small to the scale of the business, not like negative 100% EBITDA, negative 200% EBITDA, and so on. So that was organizationally built a very lean organization. Secondly, our business fundamentally, because of brand-driven business, there are investments in the beginning that go in towards building that brand. It's not very easy to establish yourself as a jeweler of choice.
Correct.
So it takes time. But once that happens, I think the ticket size in our category, the margins, etc., are healthy. The ticket size are high, and the per square feet sale in our category is actually one of the highest in the world. So I think all those result in a very fundamentally it's a very, very, very profitable category.
Not burning a lot of capital seems to be Bluestone's success mantra for obtaining profitability. On that note, it's a wrap on this edition of Startup Street, but stay with us. More news and updates will come up on the other side of this break.